Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. If you've been following along each week, you'll know that I leave my lines on the chart from the previous report so you can see how accurate technical analysis is as a forecasting tool. And if I zoom in here, you'll see that on this chart for the S&P 500 ETF, ticker symbol SPY, this is the line that I drew last week, with the end of that line being my target price. And you can see here that on Tuesday we came within pennies of hitting that target price, and we pulled back from this horizontal line, which is what I drew as resistance. And each and every week we do this, and hopefully you'll be able to eventually do this yourself and be able to forecast, not just as a forecasting tool, but as a risk management tool. I mean, obviously, if you're long the market and you see that the general markets are hitting a resistance point, it only makes sense for you to start to put some protective measures in place to eliminate or at least mitigate some of the downside risk. So, in other words, if you're long a stock and it's hitting resistance, you could trail your stop up or maybe lighten up on some of the position, move to cash, whatever it may be. But this is how valuable technical analysis is. So what does this mean for next week? Well, if you look at this candle right here, which is from the close on March 2nd, that's Friday, when I record these reports, you'll see this long green candle tells us that the buyers are starting to move in. So I'm going to more or less run a line parallel to what we did last week in an upward direction, because I think we will move higher. And I'm going to end that line at my new target price for next week. And that's what that looks like. Another thing you might notice here is a slight drop in volume as the price was dropping. Yes, the candle was green, but we had a lower low and a lower high. So that drop in volume tells us that the sellers are starting to lose some of that momentum. Now, if you look at the Qs, that's the NASDAQ market represented in the power shares, QQQ. Again, I left my lines on from last week. I drew this horizontal line up here at the top as a resistance point, and look at that. On Tuesday, we hit that to the penny and then pulled back. I also said that we'd have to wait to see if the markets broke through that resistance. We did not do that at all. In fact, we pulled back, and just like the Russell 2000, we have a long green candle on lower volume. So again, what does that mean for next week in the Qs? An upward move. That's the probability that the buyers are going to come back in and push prices higher, maybe in an effort to test this resistance. I'm going to even extend that out just a little bit so you can see that that resistance will still be in place until it's broken, and that's how we're going to play the markets next week. Now, if you look at the diamonds, that's ticker symbol DIA, the Dow Jones Industrial Average ETF, same story. Right across the board, came within pennies of hitting my price target. We pulled back, and now we have another green candle on lower volume. So I'm going to do exactly the same thing that I did in the other markets. I'm going to draw that line higher, with the end of that line being my target price. You see, if you understand technical analysis, how it works, you're basically measuring the buy side and sell side with regard to the pressures and simple economics, supply and demand, and you could measure the momentum by looking at the volume at the same time. So if you're expecting the market to go up, and you could put your stop below a low like that and limit your downside risk, and then as the market moves up, you could trail your stops up with the market until we hit a resistance point, at which time you could get out, maybe sell some of the stock or keep it and trail the stop all the way up as high as you can go. And that's how we look at the markets. Now, if you look at the VIX, it's very interesting because the volatility index did drop a little bit, but it didn't come back all the way to support. And what that means is that the buyers came back in the VIX, which is, again, inversely related to the S&P. So now, if I zoom in just a little bit more, you'll see that these long shadows are telling us that sellers are coming into the volatility index. And that's a bearish engulfing pattern right there. So what we're going to do is we're going to draw a trend line, a short-term pullback here on the VIX, with the end of the line being my target for the VIX. Remember, if we're expecting the VIX to drop, then we're expecting the S&P to rally. And that supports everything that I've just said in those other markets, the Qs, the Russell 2000, the spiders, and even the diamonds. So I'll erase this line, I'll leave the most current one in place, and then we'll go from there. You know, a lot of what drove the markets lower this week was what came out of Washington, particularly Donald Trump, our president. And whether you like this man or not, let me tell you, he's moving and shaking things up, and especially on the international markets. Look what he posted just mere 8 hours ago. And this was, again, as the markets were opening up, or prior to markets opening up, he basically said when a country taxes our products, the U.S. products, coming in at, say, 50%, and we tax the same product coming in from another country to our country at zero, it's not fair or it's not smart. That really makes a lot of sense. What he's doing is he's more or less challenging the international economists to more or less create a trade war, and that would be okay. And you know, a lot of people got shaken up, and that's what happened with the market. You know, we don't know what's a trade war. How's that going to affect companies, and how is that going to affect the stock market? Well, he is more or less intimidating these countries to lower their tariffs on our products, and then maybe we'll lower ours. He's basically exchanging dollar for dollar and getting more or less a rebate on our own tariffs that were being charged. He calls that a tax, and that's fine. And so this could actually drive prices lower in the long run, while giving U.S. companies like U.S. steel companies to be able to benefit in more sales, which in turn will be passed on to their employees in raises or bonuses or whatever it may be, or create more employment within the U.S. We're already at a 49-year low in unemployment. That's incredible. And the numbers aren't lying here. It just keeps coming and coming over and over again. And you can see that, again, what he's putting out there is not being broadcast in the news. And so investors are paying very close attention to these tweets, and it is driving the markets. It's really the first time that I could ever remember in our history that an internet social network like Twitter is actually becoming a leading source of information that gives traders and even investors a little bit of an edge before the major financial networks start to pick it up. So that's my spin on what Donald Trump is saying. Again, whether you like him or not, it is moving the markets, and I think it's going to benefit U.S. economy in the long run, and we're all going to do just fine. Now, if you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. Click on the video tab right there at the top of the page. That'll bring you to a video library that we call Market Shots. If you scroll down just a little bit, you'll see that there's a lot of good information right here that will help you, particularly the role reversal and how former support turns into resistance, and vice versa. Former resistance turns into support. Very, very important video right there. It's very short, about 6 to 7 minutes long. If you scroll down right here, you can see also bullish breakouts. You can see engulfing patterns, hammer patterns, and the like. I am a big fan of the 20-period moving average method for trading, and you can combine that method with the rubber band effect that we saw at the top of the page here, and working those two videos hand in hand will help you develop more of the signals that we use to get in and out of trades for our accounts. So that's it from The Market Guys. Thank you so much for joining us. I hope you stick with us each and every week as we put out these reports to our followers, and I hope you're learning a lot. Have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.